Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, May 30, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We've got a lot of stuff to talk about because we're coming into the close of the week. It's going to be extremely uber important. Narrowing things down just a little bit on the daily chart, as you can see, today the spiders closed just below the 20-period moving average on the daily chart. Now, the 20-period moving average on the daily chart isn't necessarily the best indicator of support on the board. They were through the 20-period moving average just last month, so it's not really that big of a deal, but it is of note, just not a bona fide place right now. Now, for example, if they came into the 50-period moving average like today, tomorrow, something like that, they didn't today, but if they came into it tomorrow and or Monday, coming from afar, that would be slightly different from a support perspective than is the 20-period moving average. Which brings me to the next thing. So let's open up the thought process a little bit and say, all right, well, if they're going to go down farther, where are they going to go down, and what is the thing, or what is the place that becomes that, at least from a short-term perspective, IRENE number? Well, right now, let's start with where that is. Right now, it is that trend line, the purple trend line at 524.61. Why is that? Well, it's the former breakout area. You go over to a weekly chart and you can see the market ran right up to that place, and it's obviously on the daily chart, just more easily spotted right here. Market ran up to that place, had a pretty big sell-off, went back above that place. Once above, she's going to come back to run a test of that place. Now, staying above is the bull case, staying below or getting below, closing daily, and then weekly below is the bear case. What else do we have in the bull-bear case? Might want to get out your sticky notepads. I'm already getting tongue-tied over here. We had an on-time type of situation for a weekly topping situation right into that trend line. Are they just going to go down for 1 week, or are they going to go down for more than 1 week, maybe 2 or 3? Just look at other pullbacks in the sequence that doesn't guarantee anything, but let's just go from here. Here comes a top. They went down for several weeks. Here's a top. They went down for about 3 weeks. Here's a top. They went down for about 4, 5, 6 weeks, something like that. Here's a top. They went down for 3 weeks, a bounce, another 4 or 5 weeks, a bounce, another couple of weeks. Here they went down for 3 weeks with a big one at the end. Here, this is week 1. Is it going to be 1 week, 2 weeks, 3 weeks, or more? We don't know the answer to that yet, but you certainly ought to be thinking about that kind of stuff. What else could we be thinking about when we're talking about and trying to uncover whether there's going to be downside or not? Where would it go to? Where would Mrs. Market go to and find some real support? Where would be a place that A, would become magnetic, and B, is a bounce back in the other direction type of place / situation? Funny you should ask. Let's start with a couple of things. First, remember this big time breakdown candle, and we said before the market will stay bearish unless they recapture that candle. They recaptured that candle, subsequently made a new high. So now, if they come back toward that candle, that was an important place. We know that from before. They got above it, they gapped back above it, they tested it, and they never looked back just yet. That's going to be a breakout area in my mind, the way I look at things. So if they come back to that place, that's the first order of business. It's magnetic. Also, if they get below, that'll be interesting. Why? Well, I'm going to show you. So first, that place is 515.30. Now, we don't know whether they will or won't bounce right off there if they get there anytime soon. But what we do know is if they spike it through to the next number, what are we doing? And this is something that we do every single day in the live room for that morning trade and other trades. I create zones. So we have the first place, and then I want to look for a second place. What's the second place below the first place that's just as important for different reasons than the first place. Therefore, we're creating a zone. What is that place? Well, let me show you something in real time how we'll do this. What if we start with a fib retracement? From this pivot low that was down here on the 19th of April to the most recent high, well, guess what? We have a 382 retracement down here at around 518. That's interesting. But what's more interesting is a 50% retracement. Just slice the move in half. 50% of a move is important. It's a Fibonacci number. It's important for a whole host of other reasons from the number people. You could see here that the 50% retracement, it's hard to see, 513.47, it comes in just below the 515.30. This is that breakdown candle high. So if they poke into that, the next place down starts to look like 513.47. So let's demark that for a second. We'll get rid of the fibs. Now we've got another blue line at 513.47, and now we notice where it is on the chart. It happens to be right around the low, which is officially 513.30 of this breakup candle where the market gapped up and went higher. This was the day when they broke out. So that low in between there and the gap from the day before is no man's land. And right in here at either this low, call it 513.30, the fib number is 513.47, and even extending down to the gap just underneath, that would be 511.29. So this whole area in there is bona fide support if reached sooner than later. And what are we saying as a refresher? If they stay below 524.61, my contention is the door is open. If they close the week below 524.61, I believe the door is open for that lower stuff. Write this down, put it on a sticky note, put some numbers on your charts. We'll monitor it over the next few days. How about inside the numbers? When volatility picks up, or at least the market moves, especially when they gap down in the midst of an uptrend, it creates opportunity. We had opportunity today. We had 3 SPY trades from basically the same place. We had a couple of play it again Sams. We'll call that a triple barrel trade. Not all traders wanted or did take all 3. Some did. Whether you got 1, 2, or 3, what difference does it make? It was a nice morning. We had a little bit of a bonanza in the live room today. Let's start here. This is at 0 dark 30. Let's start with the southbound lane. We've got 523.30, which is a gap left open. What I'm going to do is cut to the chase real quick, show you the chart. Right of the vertical is today's activity. The blue line is 523.30. As you can see, the first one was a come up short, rip it back up in the other direction. We had a lot of traders that got into that trade. Why? I think they came up about 7 cents short. That qualifies or is in the orb of the give or take. We talk about that every day in the live room, splitting hairs over pennies. Sometimes they come up short, other times they spike them through. Then, because this was still within a support area, we had an opportunity for a play it again Sam. So when they came, what's a play it again Sam? That's another trade at the same place, play it again Sam. So when they came in and officially filled the gap at 523.30, we had traders certainly hop on there for a little bit of a bounce also. And here's where they did a little dipsy doodle and then took off to the upside for the rest of the morning session into the afternoon hours before rolling over again. This was a triple play it again Sam situation. But wait, there's more. And when I go through this, keep in mind, how can you do this if you don't have these numbers? You just wait a minute. Below on candle closes opens the door for another leg down toward 521.95, which is the top end of a support zone, aka an opportunity zone, extending down to around 521, give or take. Okay, this was all at 0 dark 30. Market's not even thinking of being open when I put this stuff up. And there's your midpoint phenomenon. They spike 521.95. They get about halfway home, a little more than that, to 521, rip it back up in the other direction. They did it at the end of the day. That's adding variable risk to a trade, but nevertheless, We're talking about discussing the concept of the charts, the numbers. When they do it, we can't decide that. The market, Mrs. Market, decides that. How about the flip side situation is a northbound rescue lane where the bulls will want to make an attempt to recapture 524.61 and higher. There's your overhead resistance, 524.61. That was today's pivot. They did it again later, but they couldn't sustain price above, came all the way back down. That's that place. That's that breakout area. That's that purple line. But wait, there's still more. Remember, pause the video, read the notes, go back to the chart to double check the work. We had an 8:30 a.m. data shuffle, but what we want is the 9 o'clock, here's what we've got. So what were we actually saying setting up the morning trade? Was this the morning trade? Well, if you read this, you'll find out if they're below blah, 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 it opens the door to fill the gap down at 523.30, which the pre-market thieves already did, but this is a bounce back place. If below, here's where they go. That was that next zone. They did that later in the day. So basically, when you look at this, we had the whole ball of wax before the market even opened. All the numbers that they actually went to. Again, wait, there's one more. Check this out. If they recapture the pivot, same number we've been talking about, the door opens for what? 525.15 up to 526.11, which was the flat line. What was high of day? How about this candle? 525.14. Any accidents or coincidences? This candle, 525.20 by 5 cents overshot it. How about that? How do you know the numbers before the day even starts? Funny how that works. How would you even think of trading the market without knowing the numbers? These are the things that we go over. We've got the charts up in the live room. We're talking about the market. We're talking about the numbers. We're teaching how the numbers arrive most of the time. It's all in here. Pause the video, read the notes, go back to the chart to double check the work. It's all in here all morning long. Everything you need to find success trading the market during the trading day. How you doing? How about stocks on the move? How'd we do over there today? Pretty darn good. Let's take a look at the charts to find out. We had Oracle, AEO, CRM, NGG, and CNC. You can see here Oracle came up short in the first candle of the day, had a rally away from the number, and then came lower to the second number, bounced around, melted away the rest of the day. So the morning trade was in here. We had traders in the live room take the spike of the second number. The first number was off the table. They got a trade out of it, but then that was it. They just gave you a little bit, and then they melted away. How about American Eagle Outfitters? There was your zone at 21.42 down to 21.15. They obviously had a rip-roaring rocket ride back in the other direction. That was a nice trade. We had some traders in the live room that were all over this one. Got paid handsomely and quickly. How about Salesforce, CRM? This was getting bludgeoned today, down $50 or whatever. So here's the way this one shaped up. So it opened below the first number. This number doesn't exist. They hit the first number, that was the second number, and then they had a rip away from it for a few bucks, and that was the trade, folks. We did have some participation in the live room in this one. As they came down later in the day, it got harder and harder, and they just fluttered around. But this was the trade, the low in the first candle of the day, 220.83 against 220.85. How you doing? How do you pick off by 2 pennies a low like that when the thing's down $50? Not easy. The last two, NGG and CNC, didn't hit their entry objectives, so they're off the board. Sliding over for a moment to Camp IWM, what do we have here? Well, we had an up day. It's an anomaly. My favorite market leading indicator was up almost 1% today, while the S&P, the Dow, the NASDAQ, everything was down. Why is that? Interesting information. You'll also find that when you look over at the folks down at the transportation department, they also had an update today, 194 points, 1.3%. So these favorite two market leading indicators happened to get bids today when everything else was down. We have divergences. What will happen with divergences? They will resolve themselves one way or the other. By the way, look at this volume on yesterday's spike the low, and today you have the rip it back up in the other direction trade. Look at the volume on yesterday's spike the low. Is this exhaustion volume? Is the market down enough days in a row to get a bounce? Obviously, yes. Now, getting back to the IWM, there's no great shakes here. until or unless they recapture the 20-period moving average, the red sloping trend line, then this could just be a bounce in a downtrend, dead cat bounce-ish, anything like that. But if they can recapture the 20-period moving average, being above all the moving averages, the trend now becomes once again your friend. What about the Q people? Q people were down today. They're coming close to the 20-period moving average. Let's give a refresher course on what exactly is this blue trend line. It's at 449.34. Why is that? Because that is the most recent and former breakout area. They broke out above it. Just like the spiders, they will be back to run a test. Now, look at the spiders below their place, the same equivalent that was today's pivot. Now, the Qs are just coming into run a test of that breakout area. So the Qs overall are stronger on the chart than are the SPY or the S&P. It's of note, it's a puzzle piece-ish type of thing. That's fine. And what we'll say is coming below that breakout area in the Qs, certainly closing the week below tomorrow, that opens the door to come fill this gap down here at 446 and change. Write that down, put it on a sticky note. And by the way, along with the IWM and the transports, we have the XLF that does act canary-ish at times up today. Not down. That means that if the underlying theme is the financials have stability, then it's unlikely the market's going to unravel. If the financials are melting away, you could have muddy waters. Looks like the market could be on shaky ground. Right now, today, taking it at face value, today, nothing wrong with the financials. SMH having a down day, pulling back from a new high. Keep that in mind, pulling back from a new high, well above all the moving averages. Can you have a corrective move in the NASDAQ, in the SMH, in some of the semi-stocks? That's the reason, like NVIDIA and stuff. It's way overcooked. Can you have a correction in the S&P down to some of these places, and in the SMH only come down to, let's say, around the 20-period moving average, 230, 235, and still find support? And the answer is, yes, you can. The SMH is a pretty good proxy for the tech space as a whole. By the way, I want to circle back to something from the live room. Any folks that are listening in here from the live room, we're going to go with help a brother out tonight. And I'm not the brother. The brother, all the traders out there looking for an answer. What is the answer? How do you do this? How can I do this successfully and make money without taking huge losses? How is it done? Well, we have a formula in the live room that we think works. We know works. It works for me. It works for a lot of traders in the live room. There's money being made in there on a regular basis. Help a brother out means let's hear your success. Are you finding the live room of value? Do you make money in the live room? Do you learn stuff in the live room? Is it a place worth being at in the morning during the market trading hours? Help a brother out. Post a comment under the video. Let the folks out there looking for a solution know about it. One more thing I wanted to mention, Tesla. So we had a trader in the live room that says, hey, what's the resistance on Tesla? It was rising in the morning. I said, and I showed why. I said, look, and I did exactly this. I said, you get above this stuff right here. And the next thing they're going to do is they're going to start to run up towards the breakdown candle high right over here. Whether they come up short by a little bit, spike it through by a little bit, we don't really know. So I put a line up about 180, 150, 182 in that area. And I said, that's an area of overhead resistance. So what do we have? We had some traders in the live room that actually took a short up there and got paid handsomely, because what happened? Well, look at a 15-minute chart. It's more dramatic. See what happened? They got paid very, very well. Funny how that works. If I told you how much I appreciate each and every one of you, without you, these videos, they're not possible. We're going to wrap it up here tonight, folks. We're pulling the ripcord. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.